Okay, hello, hope you are doing well. It's another time that we are going to cover market movements, or what most people know as market trends. So for this case, we have only three types of market trends, and without wasting time, we'll just dive into today's lesson. Welcome to today's lesson. So we are going to be covering the market trends in this lesson, and the subtopics which we are going to cover is the types of market trends. Here we have the first one is upward stroke bullish trend. However, the second one is downward stroke bearish trend, and the third one is sideways stroke ranging stroke consolidation trend or movement. So this is actually the movement of price. So when you're doing technical analysis, this is one of the best thing and the most important thing that you should know. First, before you enter a trade, the first thing you should consider knowing is the state of the market. Is it on the bullish trend, bearish trend, or ranging market? So for this case, I'm just going to start with the bearish trend stroke the downward movement of the market. So for you to know that the market is on a downward movement, then there are things that you should see. The first thing, the market is making a series of lower highs, lower lows. As you can see, lower highs, lower lows. Even this one is lower high, lower low. So for this case, or when you have identified that the market has a series of lower high and lower low, then draw a trend line. And for you to have a legit trend line, then it should have three points for it to be legit or valid. So for this case, ours here has this one is 1, 2, 3. This one is close to it. Have the fourth one, the fifth one. So when you identify this point, then you can draw your trend line like this. So you draw on the upper side where the price is retesting or moving upward, retracing back, downward movement, price retrace back, then it goes down, it retrace back, it goes down, it retrace back. So when you identify this, then you are now at a good position. Now let us plan how to enter into a trade. For this case, when you are having a downward movement, the ideal point for you to enter is at this level. This level called lower high. This level called lower high, lower high, lower high. Because when you enter a trade at this point, now you'll be able to catch this movement. Then when you see the price is retracing, you can close your trade. Wait for the price to retrace back. When it will be rejected at this zone here, then you can again enter into another sell trade. Then you trade the movement downwards. Then retracement. You enter into a trade, you trade that. That is how you can trade a bearish stroke downward movement. We're done with that one. Let's go to the other one. The one we are going to cover is the uptrend stroke bullish trend. So this is the movement where the price is moving upwards. That means the price is increasing. The price is appreciating. I've just used terms that you can be able to understand them clearly without struggling. So for this case, when you have upward movement, then there are things you should identify. The chart should be making a series of higher low, higher high, higher low, and higher high. we can also be having this high here. That means price moved upward up to this level, then it retraced back up to this level. So for this case, the ideal point for you to enter into a trade is when the price is at lower low, lower low, lower low. At this point, when you enter a trade at this point, then you'll be able to catch this movement. When you enter at this point, you'll be able to catch this movement. This movement. You know why we avoid, like when trading an uptrend, you entering a trade at this level, then it means if price will go back here and you had placed a buy order here, then the price comes to this level, then it breaks downward, then you will lose. And again, the risk to reward ratio here will be not an ideal one. That means that when you place a trade at this level, then you mean that you are risking this whole thing here, and then you'll add something here. But when you enter a trade at this level, you just place your stop loss at this level here, just below it, just below the trend line. Then you will be able to catch this movement. Then again, when you are at this level here, just place your stop loss just down below. You'll be able to catch this movement. That means you'll be having a risk of like 1 to 5 to 6 or even to 10, depending on the signal that you have got. So this is more about uptrend. So I want us to go to the other type of market movement, which is consolidation. And for this case, I want us to consider gold here. Consider the price of gold. I don't know why my chart is misbehaving. I want us to consider the price of gold. For this, I'll just go to 4-hour chart so that we can see it clearly. So as you can see here, we have a ranging stroke, a consolidation trend. And as you can see here, we have a price is stuck between two levels. We have the resistance zone and the other zone here below, the support zone. So the price came at this level, went down, and it was rejected at this level. Then it came back to this level, upward, then downward. It is stuck between a resistance and a support zone. So this is what we call consolidation market. I would advise you to stay away from this market, because when you trade as a beginner, you can just make losses because you don't know which direction the market is moving. But if you are able to identify these zones here, you wait for the price to be rejected at this zone, then you can place a trade targeting this zone here. When the price arrives at this zone, then you can exit your trade and wait for the price to be rejected so that you can place a buy trade. But the good thing that you should do here is to avoid or stay away from the market and wait for breakout like this one, then wait for a retest here, then trade this movement upward. That is an ideal way of dealing with ranging market. Now we are done with this thing, but I want us to cover the importance of us identifying the trend of the market. The importance of us identifying the trend of the market. And as I told you, when you identify a trend of the market, you are on a high position to get a winning trade. So you should consider identifying the trend of the market. Before you enter a trade, just check your charts. Is this market is on a bullish trend, bearish trend, or sideways movement? When you are able to identify this, then you can decide, should I place a buy trade? Should I place a sell trade? Or should I stay away from the market? Now, the benefits of identifying a trend, one is to increase the probability of getting a winning trade. That I've already repeated most of the times here in this video, that for you to get a winning trade, you should first identify the trend of the market. The second importance is when you have the capability of analyzing the market and knowing the trend or identifying the trend, then you can be able to spot the start of the trend when it's at middle level and at the end of a trend. Another thing is identify and be able to predict trend reversals on time. So when you are able to identify trend, then you can be watching over it. When this trend reaches to a point when is at consolidation level, then you should start predicting whether the price will reverse or will continue. So for this case, since you had identified the trend before and you came to a conclusion that it is an uptrend or a downtrend, then you see consolidation. Then you start looking for reversals. You wait for the price now to tell you the direction that is going to move. And that is what I demonstrated here using gold. Demonstrated using gold at this level here. When you are at consolidation level, you see that the price at this level, then you wait for the price to break either upward or downward. So for this case, price did break upwards. So after breaking upwards, then you can see after retracing back, the price went upward. That is how you can be able to identify trend reversals. That is all about market trends, and I wish that you continue learning more about them so that you can be able to get winning trades when you are trading. It is one of the best lessons that you should consider learning early enough before you call yourself a pro. If you don't know market movement, then you have a long way to go. This is all about market trends, and I wish to call this video to an end. And after watching, just urge you to subscribe to my channel so that we can be able to create more content, showing that we have people who are following. Have a nice day.